Hello, everybody, and welcome to the fourth quarter of 2017 financial update. What we're going to take a look at over the next couple of minutes is how the general fund did in the fourth quarter of 17, as well as take a look at how 2017 compared over a four-year look. And then we're going to take a quick look at how the sanitary sewer fund, the stormwater fund, and our pension fund did in terms of their revenue performance for 2000. Taking a look, we'll start with the general fund revenue. The total revenue estimated for 2017 was 34.3 million. We ended up at about 36.3 million, resulting in a $2 million or 7% variance. There were two large reasons or two large positive variances that generated that $2 million. First, the township offered a real estate tax prepayment program at the end of December that generated roughly 1.1 million. That is 2018 real estate taxes that were received in 2017. So as we look into 2018, we should anticipate seeing our real estate tax revenue down by about 1.1, 1.2 million as a result. Also, as has been reported throughout 2017, the permitting and related revenues generated about $1 million of positive variance. We anticipated that because most of those dollars are generated from the Villanova project, the Villanova dormitory project. One area, the business taxes ended up coming up a little bit short of expectations, but as we'll see, they continue to trend upward for the most part. As we take over the last 4 years, they continue to trend upward. Wanted to point out that after the real estate tax prepayment is removed, the total general fund variance for 2017 was roughly 912,000 or 3%. Quickly looking at the expense totals, we budgeted 34.85 million. We ended at 34.84 million. So only about a $16,000 positive variance there. That positive variance landed basically at where we had budgeted, but there were a lot of mixed results in the line item details. We had large positive variances in our payroll areas for police and public works as a result of vacant positions and as a result of the reorganization that the board approved back in late spring of 2017. On the areas generating some negative variances, we, as had been reported throughout 2017, the engineering escrow is still behind. There's a negative variance showing up there. And then as we talked during the budget season, there were unbudgeted transfers from the general fund to the sanitary sewer fund that ate up about 1.75 million in cash reserves. Otherwise, that variance would have been, that $16,000 variance would have been much higher. As we take a look at what this means to the general fund's net revenue and cash balance projection, we can see that for the fourth quarter, if we had landed right on the amounts as budgeted, overall general fund cash would have decreased slightly from 2016. But in the end, it actually increased by about 3.5 million. So that's a positive variance, and that's just the aggregation of all the different revenue, positive variances on the revenue side, and on the expense side as well. One thing to note is that part of what's feeding into that positive variance here is the 1.1 million in real estate tax prepayments. So we would anticipate 2018 those revenues going down. And then also at the same time, we noted the 1.75 million in general fund transfers that had to go to the sewer fund. Those are budgeted to be returned in 2018. So we'll have some pretty big transactions that'll impact how we end 2018 as well. But for 2017, as you can see by the graph, we basically trended above the budget line all year and ended up ahead of the curves. Taking a little bit closer look at the real estate taxes, the total estimate was 12.5 million. As discussed, we ended up at 13.7 million. $1.1 million positive variance. That is almost due entirely because of the prepayment program. When the prepayment program is removed, the actual variance for just looking at 2017 collections was 22,000, or right in line with what was expected. And that's not unusual. As I've reported in the past, the real estate taxes usually land right where we expect them to be. They're very predictable. Taking a little bit closer look at the Act 511 taxes, the full year estimate was 14.2 million. We ended up at roughly 14 million, resulting in a shortage, or the actual revenue coming in about $218,000 short of expectations. Three of the tax areas that did better than expected was the real estate transfer, audits, and the local services tax. The two areas that fell behind or missed expectations were the BPT and mercantile. As I'll show here in a few minutes, even though these revenues on the aggregate missed the target, you'll see that in most cases the trend for over the last 4 years is still positive. What this means is that we just budgeted a little bit more aggressively than what the actual growth was. And then we take a look at the all other general fund revenue, which includes permitting, interest, departmental earnings, and grants for the most part. This group did really well. And again, as noted earlier, we had building related permitting revenue perform very strong as a result of the development projects, again, namely the Villanova Dormitory project is the primary catalyst there. Recreation revenue is strong, and it typically is. As I noted, the engineering escrow continued to lag, as did the police enforcement and parking. Noting that part of the reason for the parking drop off was due to library construction and a little bit different policy or approach towards forgiving tickets. Then the cable franchise missed targets. You'll see in the graph that the last 4 years, the cable franchise has been basically flat over that period. We had budgeted for a slight increase. So year over year, the revenue is right where it's been historically. It just did not grow like we had expected. But the amounts are not significant. So for this group, you can see a just shy of $1.2 million positive variance. When we take a look at the general government expenses, this group includes the administration, the finance department, the elected treasurer, as well as the IT division. You can see that for finance and the elected treasurer, they both departments ended under budget. The reason the administration was a little over was due to legal expenses being higher than budgeted. And on the IT side, as reported back in Q1, when the finance server crashed, additional expenses were needed to help bring that back to life. It's hard to believe that was a year ago. Switching over to the protection to persons and property expenses, this group includes our community development department, our police department, our fire contributions to the volunteer fire companies, as well as our emergency operations center. As you can see, all three of the divisions here or departments here ended under budget, and primarily the reason why was because of payroll and related expenses coming in under budget due to either vacant positions or, again, due to reorganization shifts as part of what was approved by the board back in May or June of 2017. Looking at the Public Works Department, the divisions that make up this group include our buildings and grounds, solid waste and recycling, engineering, highway, and our mechanics. As you can see here, all of the divisions were under budget with the exception of engineering. Again, what's causing that variance is a lag in our reimbursement from the escrow accounts relating to development activity. So as we work to catch ourselves up on being reimbursed for those engineering related expenses as part of those project reviews or development reviews, that variance will improve. The primary reason for the positive variances in the other areas is due to payroll either vacant positions or organizational changes that generated savings. Taking a look at our Parks and Rec grouping, this includes our community recreation and programming, as well as our Park Maintenance Division of Public Works, our tree removal program, and then as part of the community recreation, community programming group, they have the recreation programs, the gym division. Park maintenance had a large positive variance. Again, it's the same theme. Payroll and related costs came in under budget due to vacant positions. The tree removal, as we reported throughout 2017, we had a large $25,000 project over at Hartford Park, and then just our regular, consistent, or constant need to remove dangerous trees throughout the town. And then the Sulpizio gym variance, that's the result of overtime costs to Public Works for cleaning the gym. The last grouping is our all other general fund, which includes contributions to the library as well as the community organization, and then our insurance and retiree benefits. The other category is just the debt service banking fees. As you can see, there's a large positive variance in the insurance and retiree benefit group. That's a result of cash flow decisions made on the cash flow side. Again, touching on the fact that there were large transfers needed at the end of the year out of the general fund. We utilized some of the cash that would have otherwise been transferred here. At the end of the day, once we get the sewer fund balanced out, that 1.7 million will be transferred over into the OPEB trust fund and expensed at that time. So that's a temporary positive variance. One thing that we added to this presentation a couple quarters ago, the year-over-year comparison graph. So we take those same categories that I just presented in detail for the fourth quarter, and then we take a look at how each of those groupings have done over the last 4 years. Again, as I touched on, this is the tax group, and you can see that there is a spike in real estate for 2017. That's the result of the prepayment program. For the business privilege tax, you can see over the last 4 years that revenues have been relatively consistent. 2017 had an uptick versus the prior years. Again, we had budgeted for a little bit bigger increase and just came up a little short of that, but you can see that the overall trend is still strong and positive. The real estate transfer continues to have a general positive trend. We had a little spike in 2015 that's come back down, but you can see that from 16 to 17, the revenues were strong. Mercantile is the one area, when you look at the last 4 years, that there's a continuing downward trend with those revenues. If this graph were to go back 4 years beyond what you're seeing here, you would see a mirror image of what you're seeing. So there were 4 years from 2011 to 12, 13, and 14 of that revenue ramping up, and now we see it coming back down. So again, something to keep an eye on and be part of our discussions going forward. The local services tax, which is paid for by all the employees that work in Radnor Township, you can see that is a positive trend over the last 4 years, with 2017 and 16 being the high water mark. Again, I'm not going to go into detail for each of these categories, but you can see that with like the building permits, 2017 was a very strong year again because of the Villanova development. And then the other revenue categories, which for the most part are for those revenues that are meaningful to the bottom line, their performance has been in line with prior years. The fines category, as noted, that's basically our police enforcement and parking enforcement area. And I touched. Taking a look at the expense side, you can see again the 4-year trend for each of our departments and divisions. All the way through into on this slide, we have the general fund summary year-to-date comparison. You can see that for the revenue, there's first of all, the 4-year trend is positive, and then for 2017, you see a spike up. We know that 1.1 million of that jump is just a prepayment of 2018 revenues. But then on the expense side, you can see that for 14, 15, 16, there was very little growth. And then in 17, in fact, there was a reduction in total operating expenditures. And then positive net revenues, both before and after the general fund transfers are built in. And just so you understand, the general fund transfers is when we take money from the general fund and move it to one of the other areas of the budget. The biggest areas are for debt service, the payment on the township's outstanding debt, as well as our capital program. And as noted in 2017, we also had to move 1.75 million to our sewer fund because of the emergency projects and the lack of cash in that fund to handle them. Speaking of which, the sewer fund in 17, we estimated 4.8 million. We ended up a little over 5. The reason for the positive variance there was stronger current accounts receivable collections, and then we also ran an amnesty program in the fourth quarter. As reported at the end of the third quarter, we had anticipated a sharp decline in cash balance for the fund because of the emergency projects at the King of Prussia and Skunk Hollow. But also, as discussed then, that 1.75 million of general fund dollars were transferred into this fund to stabilize the cash and make it so we can pay for the projects that we needed to install at the end of the year. So that's why on the fund balance chart you see the budget line going into the negative in December, but then what actually happened is the revenue stayed positive to the tune of about 3 million, understanding that almost 2 million of that is general fund dollars. The other million is dollars that are already spent or obligated for projects that were completed. They just haven't been. Taking a look at our storm, as noted way back in the first quarter, the revenue for this fund is billed and collected all in January of each year. So these numbers really haven't changed throughout 2017. There was a 3% or $28,000 positive variance. Again, in each of the years that we've had this fee in place, the revenues have performed as anticipated. So collections have always been very strong here. Finally, taking a look at our pension fund, we added the fourth quarter to our running tally. We actually had 12 straight months in 2017 with positive returns. And the bottom line was that for our pension funds, the change in value was 15.19%, which was a very, very strong year, which shouldn't be a big surprise. The overall stock market performed along those same lines, obviously not to the same percentage, but the trend was the same. And then we target a 7.5%. That actually was reduced in the fall to 7.25%. But at any rate, our actuals were our actual return of 15.19 will generate a actuarial gain the next time we do our actuarial update, which will be in 2 years. And as we talk about each time that this topic comes up, those actuarial gains will result in a reduction in the overall pension expense. So anytime we can beat the target, we are less reliant on general fund expenses and letting the market generate the assets needed to fund this program just a little bit more. So that's good news for sure. And that is a wrap. So that's how we ended up 2017 already. Time sure is flying. But as you can see, revenues continue to do pretty well. And on the expense side, in the areas where we have negative variances, we know what they are. And to the extent we can control them and manage them, we're doing that. Payroll and related savings are being realized through reorganizations and through vacant positions. So we'll continue working on those types of items in 2018 and continuing to find ways to keep the financial picture of the township as strong as can be. Thank you, and don't hesitate with any questions.